Hello everyone, welcome to the Ichimoku.co daily markets review for the trading day ending Monday, April 27th. Well, firstly to the S&P 500, and here we've seen the market making a new major high today, establishing that high at 21.25 and breaching the level from the previous day's trading and the day prior to that. The market testing up above that previous resistance around that 21.19 level, previous major high, and failing to close up above there once again for the third consecutive trading day. It does suggest that there is some doubt about whether the buyers really do have the strength to close the market up above that level. And with the emergence now of this black body candle, and a candle where the sellers have taken control away from the buyers from the previous day's trading, it does suggest that there is a good possibility of a change of trend to the downside. Now, in terms of a bar chart, we have a candle or a bar that's made a higher high and a lower low, and that's what we call an outside day. It's a day of indecision, and that's basically because the buyers were strong enough to take out the previous high, the sellers were strong enough to take out the previous low, so we have a lot of strength and quite some volatility throughout the trading day when compared to the previous day's trading, and that does raise doubt about the ability of the buyers to continue the trend to the upside. Combined with that and the sellers taking control and the body of the candle now turning from white to black, and with it being quite large in terms of the previous few candles, it does suggest that the sellers are certainly attempting to trade the market to lower levels, and very real possibility of the sellers testing back down to the 2100 round number level. Now, we also have the Tenkan-sen trading around that area, so we are likely to find very strong support in that region. If the market does breach that area, we do have some support at 2093 and then down to the Kijun-sen trading at 2085. Just taking a look at the bands here, and here today we've seen the market testing very close to the upper band, finding support there. The upper band trades at 2107, the market is closed at 2108, so just above, and we should be watching that area very closely for tomorrow's trading. But I suggest that with the sellers taking strong control of this market, with this candle forming a potential bearish bearish engulfing reversal pattern, there is a very real possibility of that area failing to hold, but as always, react to the area when it's tested again. If we do see strong selling coming in and that area failing to hold, a very real possibility of the S&P 500 testing back to around the middle of the bands, trading at the moment at 2091, and that's an area we should be watching as very strong support. Now, just taking a quick look at the Rrg charts, which are the relative rotation graphs, and we're looking at the various world indices and comparing them to the S&P 500 and looking for those that are outperforming the S&P 500. And if we scale out here, we see that SSEC, the Shanghai Composite Index, has been very strongly outperforming the S&P for some time, gradually weakening, as is the Hang Seng Index here, previously leading the S&P, and it does suggest that there is a possibility of this market rotating down and through into this lagging sector. But what we find with the SSEC, with the Shanghai Composite, is that it doesn't end up moving into that lagging sector. It tends to rotate through down into the weakening and then back up into the leading sector. But it is at the moment the strongest sector, and seems as though it will reach back up into that leading sector. The Hang Seng may be different. We should follow that, and there's potential for it to continue to decelerate and move down through here and rotate into the lagging sector. But at the moment it is a weakening sector. Just looking at the Shanghai Composite Index and trading up above each of the Ichimoku indicators here for quite some time. Very, very strong, looking a little overextended in the depth away from the Ichimoku cloud, but certainly no sign of the market testing down to significant lower levels. Importantly, the Tenkan-sen has held a strong support in the recent past, and it should continue to do so. Looking at the bands here on the right hand side, trading well outside of the upper band for quite some time. And if the market does test down to the upper band, we should see that area holding a strong support roughly at the 43.27 area. Just looking at the relative strength here against the S&P, and very strongly outperforming, moving up above the upper band, and no sign that that is going to weaken. One thing to watch here for, however, is the high volatility in this market, and we know that markets move from high volatility to low volatility. If we look at the last time that we were at a high volatility situation and volatility came off, we didn't see any significant retracement in this index, and it then moved to a higher volatility level. So what we'd like to see is for it to move down below this level of volatility and trend down strongly, and we could see a retracement or some congestion. Now, the other markets to look at here, one is the FTSE, which was previously outperforming and leading the S&P 500, but is now moving into that weakening sector. So still outperforming, but losing momentum, and will perhaps churn through into that lagging sector and be a sector that we don't want to touch. The one to watch here is the Nasdaq 100, NDY here is the code, and it has moved from the improving sector through into the leading sector. So the Nasdaq 100 is leading the S&P 500 at the moment in terms of relative strength and in terms of momentum, so accelerating in terms of relative strength. And if we look here at the Nasdaq 100 and on the Ichimoku chart on the left hand side, solidly performing up above each of the Ichimoku indicators previously for the past week or so. A strong bullish market in all three timeframes, but sellers coming in today, as we saw with the S&P, a black body candle, sellers taking control. We do have potential support around this gap that was opened up between these two candles, and it does extend roughly down to the high of that candle, which is 44.96, or exactly to the high actually. So 44.96, just below the 4,500 level, is where we may see some strong support coming in if the sellers do continue in this market. Now, with this being a bearish engulfing candle, it does suggest that there is good likelihood of a change of trend, so we will be watching that. If we look at the bottom here of the chart, and we see that volatility is at a cyclical low and has been for some time, so waiting for volatility to continue to tick up, and that's exactly what we're seeing, outperforming here the with the volatility up above the upper band that I've placed on it, and suggesting that volatility is trending up quite strongly. And if this window that was opened up holds, and we do see buyers coming back into the market, we could see the Nasdaq 100 trading to higher levels. If the window here is breached, looking to potential strong support around the swing highs here, roughly about 44.80, 44.82, and then down at the 10% indicator at 44.47. Now, there's also potential for support at the top band on the right hand side here with the band charts here, and the top band is roughly about 44.64. Moving next to the sectors, and here we see the very strong outperformer, the energy sector, and it was previously trading very strongly up in that leading quadrant, but it has been decelerating and seems to be trending down very strongly for a test down into that weakening quadrant. The improvers here are XLB, and these are the ETFs of the sectors which are tradable. XLB is the materials sector ETF, and that's leading the SPY ETF, which represents the S&P 500, and also XLK, which is the tech shares ETF, and that tech shares ETF moving into the leading sector is the main reason why we see the Nasdaq 100 beginning to outperform the S&P 500. The laggards here are XLP, which is the consumer staples, XLY, XLV, the healthcare stocks, XLY here is the consumer consumer discretionary, and that seems as though it's beginning a move up into the improving. Not quite there yet, but if it does move up into that improving, it's one that we should begin to pay attention to, which then may cycle through into this leading quadrant. But the ones to be watching here, certainly XLE, which is now moving down quite quickly into the lagging, XLB, which is the materials, and XLK, which is the tech sector. And if we look here, XLE on the left hand side, and it's been congesting for quite some time, has just slightly closed down below the 10% indicator, suggesting some weakness, a possibility of XLE moving down to find some support down within this small rectangle that is formed, small flag type pattern. If we do see a close down below the bottom barrier, we could see this ETF moving down to find support at the Kijun-sen indicator at 79.65. There still is a possibility of the buyers coming in, so watching the upper boundary of the flag for a potential bullish breakout, but certainly with the market just testing below the 10%, it does seem as though we could test down to lower levels. Also over to the right hand side, and here we previously saw XLE holding support at the upper band, and now for today's trading closing in a bearish manner down through there, so a possibility of a test down to the lower levels. Moving to XLB, the material sector, and here we've seen a bullish breakout up above the Ichimoku cloud, so a very strong uptrending market. If we look at the relative strength here, strongly outperforming the S&P at a cyclical low, and no strong sign of it moving up significantly yet. So what we want to see here is some continued follow through to be a bit more convinced that we are going to see further development of the move to the upside. We did previously see the bullish breakout, some strong bullish follow through, and on the right hand side the market testing very strongly up above the upper band, and if we do see the ETF come off, we're likely to find strong support around that upper band about the $50 level. And just to XLK, the technology sector, and here we see strong bullish activity up above each of the Ichimoku indicators, supported by the Chica span, moving up off a cyclical low, trending up strongly, and suggesting that we could see further upside development. However, the formation of a spinning top type candle here does suggest indecision has entered the market. We could see something of a retracement, and that wouldn't surprise. Now we do have some strong resistance up around this swing high at roughly about the $43 level, and we saw the market almost testing up to there today, and the rejection coming in, but potential for strong support around this level here where we saw previous rejection and then the market breaching it over the last couple of days, 42.76, so potential support from there through to roughly about the 42.50 area.